This is Christine Thompson with Baird and Warner. I am here to share with you market updates for the Naperville area. I do this every week, and I do the same types of graphs. So if you continue to watch this every week, you're going to know what format of information you're going to be getting. I keep this as quick as possible, so I will update it or upload it into YouTube. So if you are, hey, slow down, I got to stop, I want to see that graph more, just go to YouTube, pause the video, take your time watching it. But I'm going to get going here and screen share so you can see all this fabulous information that I like to share with my clients, and my audience. So you got my contact information here. If you ever need any information about what I'm presenting, or maybe you want market stats for your particular hyper local market, just let me know. I can always pull information any way that is needed. Now, in case this is the first time you're ever watching this, what I do is I talk about, or I'll reshare what was last week's information, and then I talk about this week's information, so you can compare week over week what's happening with what's going on in the market. So this week, last week, we saw that there were 64 new, 68 or 34 private. We can add that up to about 100, but it's probably a little less than that because not all private listings are going to allow showings. And some of the news may have been agents just trying to refresh an existing listing. So if it's, if we're adding up here about 98, it's probably like 85, 80, something like that. And then we see under contract 58. There still is a nice spread going on here, you guys. So it's showing that there aren't as many buyers as listings happening. It's getting a little bit soft. I don't want to get crazy and say the market has changed, okay? This week, we're seeing 54 new and 26 close. That's about 80 and only 45 under contract. That's even softer than the week before. But it's interesting. I got some other information in here that's interesting, but let's just keep in mind what we saw here between the new listings and under contract. I'm not even seeing any private listings in here. They should be in here. So I'm wondering if no private listings even came up this week. That would be kind of crazy. But if that's true, that means less listings are getting signed. So average list price a week ago, we saw for active listings was $677 and under contract $608. Could be different inventory that's going under contract than what's active, but we can see that buyers are probably leaning towards a little bit lower price. And then now this week we saw average list price at $694 and under contract $608. So the under contract price range, price average, is at the low sixes, and we're seeing the ones that are active are at the high sixes, going into 7 almost. They're not getting under contract. Average days on the market 2 weeks ago was 43 days for homes that were active, not getting contracts, and then under contract 34. We've got 34 that went under. This week, 30 are active, 26 under contract. These are just for detached homes in Naperville. Keep in mind, we're following after the July 4th holiday. This week here, this was July 4th holiday, actually. Had a lot going under contract. The week after, only 26, but it's an eight count difference. It's not big. These are just the numbers behind those bar graphs. If you want to take your time, you can look at it closer. I'll point out one thing for you. The average list price for homes that closed was $609, and their average list price was $635. So now that to me is more of a stretch between the listing price and sold price on the average. Yes, there are homes that are still selling at or over list, but probably not as many, or maybe not as much over list, that this difference is we're starting to see a gap between list price and sale price. Okay, this was a list price $635, sale price $609. This week we see the average list price was $644, sold price $591. Wow. We had a few weeks ago where it was pretty much neck and neck, close to list price, sale price. I think we had 1 week where it was over list price for average. Now we're seeing a gap here. So these are the subtle signs that things are starting to shift in the market. All right. Let's look at showing activity. It got real slow during the July 4th weekend holiday. Then it picked up last weekend. And this was actually June. I should have put this row at the top. My apologies. So we started at 3.1. It went down to 2.4, 2.39, real low during July. Then we had a sudden boost on this last weekend. You know, people were done with the holiday, getting out there again. A week ago, market action index needle was at 52, strong sellers market. This week, 53. So that's where I'm saying, you know, average list price to sale price, we're seeing more of a gap. But the action index needle, that's telling us it's still a seller's market. And so are the showings, you know, we had 3.19, you know, kicked up again. So, you know, it's not completely like, oh, it's definitely shifting. Depending on how you skin the cat, you know, some of it's indicating subtle signs, others are not. This is not, the pickup in showings is not. So it's probably a blend of all of that. So probably just a very, very slight, subtle signs of change in the market. So if you're thinking of selling, you know, I wouldn't wait, because you don't know when this is going to start picking up with the subtle signs and shifting more. And you certainly don't want to be looking in the rear view mirror going, that was the time we should have done it, instead of waiting, thinking, oh, you know, it's a strong market, you know, we got our time. Start packing. All right. Interest rates. Last week, we said I pulled up 3.28 for APR and then 3.5 for FHA. These are both APR. 3.28 is conventional and 3.5 is FHA. So let's see how this week is. 3.25, 3.53, pretty much the same, staying flat. That's good. We don't want to see the rates creeping up more. I will say these APRs were hovering at 3 or under earlier in the year. So they have gone up. Love, love, love this graph, because this is what I have been trying to tell people, especially you buyers out there, thinking like, well, I'm going to wait until the frenzy dies, because, you know, eventually the market's got to tank. You know, these inflated prices, it's got to drop. You know, we're going to have a lot of stress properties coming in the market. Oh, I'm going to go out there as an investor right now. You know, the prices are too high. And it's probably a bubble. You know, we're probably going to have a bunch of, you know, prices going down. Well, that bubble in 08 was very different circumstances today. And one of the big factors was that back in 08, there was no equity in the loans. This week, we got a lot of wealth stored up in US homes. We didn't in 08. There was no wealth in the homes. People were getting loans, no doc loans, putting nothing down. They had no money going in for, you know, when they first bought the home. And then, you know, they saw the market going up for a little while, and they were using it like an ATM machine, because lenders were just being way too lenient, letting people borrow off their homes. So they were very poor. There was no equity in the homes. Today, we have built up over 33,000 in a mortgage on average in equity. So average equity on mortgage homes is 216,000. Way back in 08, this would have been in like 4-digit numbers only. Crazy. So it's way healthier now. Buyer or sellers are not going to be walking away from their homes the way they did in 08. A lot of people just stopped writing that mortgage check and said, the heck with it. Why am I paying my mortgage? Because my house is worth less than what I owe on the mortgage when the market started tanking. And that's why all of a sudden it just kept more and more and more properties coming on the market. And then it became big competition among themselves, a lot of inventory, lots of choices for buyers. Sellers had to really give their houses away. But right now, inventory is really low. As you saw in my earlier graphs, not a lot, you know, like 60, that's it. 60 in a week. I mean, relatively speaking, for 160,000 population town, that's really, really low for how many detached homes would come on a market and what's going under contract. So don't be expecting for the market to implode and get a ton of inventory and prices dropping down. Not happening, people. So if you're a buyer and you're fed up with the market, just hang in there. Hang in there. It's worth it, because the interest rates are still low and the prices are expected to continue going up, because sellers are staying in the homes. The inventory is not going to go up. And buyers that do need to buy, they're going to keep pushing that number up. And these homes are closing. They are closing because buyers are even guaranteeing appraisal gap. So they're willing to pay the difference between how the house appraises, what the contract price is, so the seller can feel confident I'm getting that contract price. And surprise, that home closes. And guess what it is? It's a new comp. So more and more homes are appraising out and are becoming the new baseline of value. And so that means home prices are going up, you guys. They're going up, and interest rates have been creeping. Fortunately, in the last 2 weeks, they haven't, but I'm just looking at it microscopically. But if you looked at it probably a quarter or the first quarter of the year, interest rates were substantially lower. All right. So, get on your horse, get on the saddle, get out there, start shopping for homes, get your house on the market, sell your house while you can, because we don't know if this is going to continue. All right. But for you buyers, even if the frenzy ends, your prices are not going down. All right. They're not going down. So even though you're in a bidding war right now, you're only bidding up to what you're probably going to be paying in 6 months from now anyways. Get in your house while your interest rate's low. Sellers, get out there while there are bidding wars and you can get that better price. And that's what I have to say for this week. I'm going to just put my screen up here again so you can remember my name. You know how to call me or text me or email me or go to my website. I got links on my website to all my social media pages. I'm on Facebook, LinkedIn, Twitter, Instagram. Go out there, look for me. I'm always trying to post information out there to just be motivation for all of you and to keep you updated on what's going on in the market and what's happening with activity with homes. All right. So I appreciate you all watching this show. And I hope you have a great day.